Welcome to your Monday Market Outlook. My name's Matthew Buckley, the Chief Investment Strategist here at WCI, and the averages are off their lows of the day. We started out this Monday opening to the downside, which was a much needed open to the downside, in my opinion. We've had essentially a 6-week melt up in the market, but on extremely low volume. Matter of fact, the Wall Street Journal had a great article today, Epic Stock Rally Finding Few Fans. And why is that? Well, folks, the rally's been on low volume. So my 3 kids went back to school today, really starting to go heads down on the market. All the traders are starting to return from their 5th or 6th house in the Hamptons and spending the weekend with their 5th wife. So now they're going to start getting serious about what's going on in the market. And folks, the volatility index, which is kind of the barometer, the fear gauge that a lot of people call it in the market, is actually up really high today, which is a lot. Look at that. The VIX is up over 8.5% today, and the market's really not down that much. It's essentially flat. So that tells me a lot. And with the VIX being, this is still at 5-year lows, folks. The last time the VIX was this low was before the financial tsunami hit, and we all know what happened there. And volatility is going to be seen returning to this market. You can see financial tsunami, and then world peace breaks out. European implosion, world peace breaks out. We lose our AAA credit rating, world peace breaks out. Well, guess what, folks? I think the market's completely overbought at this point, and we're going to see a little bit of sideways trading for the next, call it 2 or 3 weeks. All eyes are going to be on the August jobs report, and write this date down. September 7th. And then the following week, the Fed is going to meet on September 12th and 13th. So the market's got a lot to digest around these numbers. Some people believe the market's rallying, that this rally has been on bad news, and that is good news because the Fed's going to inject more liquidity by buying longer-term treasuries and selling shorter-dated term treasuries. But we've seen some, for lack of a better word, green shoots, right? Some better than expected unemployment numbers, starting to see some other numbers that are economic numbers that are starting to show maybe the economy on firmer footing, or are they just an anomaly? Who knows? But what I do know is that come September, beginning of September, we're going to see volatility start to return with a vengeance. And we just saw the chart of the VIX, and it's up 8.5% today on not necessarily a really down day in the market. So, folks, if you're a regular trader with me in Wealth Creation with Options model portfolio, which is doing great, by the way, you know that we have a lot of bilge pumps on, hedges, so to speak. We are, SDS, gold, the VIX, the VXX, and also USO. We have a lot of hedges on, so when the market really does move to the downside, which I think it's going to do with the election coming, the fiscal cliff, the potential Grexit, Greece exit from the Eurozone, just a whole host of issues out there that aren't good. There really isn't any good news on the horizon unless you're an Apple investor, and that thing just keeps on going up in anticipation of the iPhone 5. But there's enough canaries in the coal mine that are dropping dead. For example, the BDI, the Baltic Dry Index, is down about 50%. Year to date. That's just nuts, folks. So people aren't shipping. And the Russell 2000, which is it's an index of small cap stocks, and even the Dow Jones Transports are weak. Now these stocks typically, and again, this isn't our mother or father stock market, so I'm going to say typically with a little asterisk there. These stocks and sectors tend to lead us into and out of a recession. And they're not acting like that right now. So again, this rally that we've seen in the past 6 weeks has been on low volume. It's melted up, and if you're a regular trader of me throughout the week, you know that markets tend to go down a lot quicker than they go up. So folks, again, not a believer in this rally. We're not fighting the tape here at WCI. We're making money on that. That's what perfectly hedged portfolio should look like on a day like today. When the SPOs are essentially flat, the Dow's down just a little bit, you should be seeing some greens, some light greens, some pinks, and some reds. So that's what we have for today's market outlook, folks. Make sure you go to wealthcreationinvesting.com/trading-the-zones. Our new futures trader, Thomas DeLello, has a great offer out. It's a 6-video futures training program. I actually took a swing through it because why? I want to learn how to trade futures as well. I love the leverage that futures brings to the average retail investor. Obviously, leverage is a double-edged sword, and it can cut both ways. But the way Thomas follows order flow and also has these proprietary trading zones, I think you're going to find absolutely beneficial to add to your trading arsenal right now. So go to wealthcreationinvesting.com/trading-the-zones right now, and you can get started for just about $14, folks, and it's normally around $200 his 6-video course. All right, so happy hunting. Make sure you hedge, and I'll see you at Friday's market wrap-up.